countries and regional groups are increasingly diversifying away from the US dollar in trade transactions. This trend, known as de-dollarization, aims to reduce dependency on a single currency and promote economic stability by utilizing a mix of currencies. By embracing their own monetary units more prominently, nations seek to lower geopolitical risks and bolster local economies. This evolving landscape is reshaping global trade and finance dynamics, and has the potential to alter the significance of the US dollar in the global economy. In this video, we delve into the recent shifts by various countries towards reducing their reliance on the US dollar in international transactions. We explore the motivations behind these decisions and provide insights into their economic strategies. Furthermore, we analyze the de-dollarization initiatives within the BRICS Plus bloc, focusing on the substantial measures these nations have implemented to broaden the scope of currencies used in global trade. Within BRICS and its expanding network, there is a pronounced emphasis on advancing digital currencies and central bank digital currencies, or CBDCs, as part of their de-dollarization strategy. China has notably made substantial strides with its digital yuan, positioning itself at the forefront of CBDC development and adoption. Russia and India have also initiated pilot projects for their respective digital currencies, while Brazil and South Africa are actively exploring CBDC implementation. This collective endeavor within BRICS underscores a concerted effort to reduce dependency on the US dollar, enhance financial sovereignty, and modernize cross-border transactions using digital financial instruments. Historically, the majority of China's cross-border payments were settled in US dollars. However, this trend began to change significantly in the last decade. By March 2023, for the first time, the share of payments settled in yuan surpassed those in dollars. As of March 2024, over half, 52.9%, of China's international settlements were conducted in yuan, while 42.8% were in dollars. This represents a significant increase from less than 1% of payments being settled in yuan in 2010. China's de-dollarization efforts include several key initiatives. The country has established numerous bilateral currency swap agreements which facilitate trade using local currencies. By early 2024, China had signed currency swap deals with over 40 countries, totaling more than 4 trillion yuan, or $582.3 billion. This network supports the use of the yuan in global trade and reduces reliance on the dollar. In addition to currency swaps, China has actively promoted the yuan in major trade agreements, especially with strategic partners. For example, agreements with countries like Russia, Brazil, and Argentina have enabled these nations to settle trades in yuan. These efforts are part of China's broader Belt and Road Initiative, which aims to expand its economic influence by financing infrastructure projects and facilitating trade in yuan. China has also diversified its reserves by reducing its holdings of U.S. Treasury bonds and increasing its gold reserves. In the first quarter of 2024, China sold a record $53.3 billion worth of U.S. bonds, part of a broader trend of decreasing dollar assets while bolstering gold holdings. Russia has notably ramped up its utilization of the yuan amidst Western sanctions imposed following its actions in Ukraine. This strategic shift has curtailed Russia's access to US dollars and other Western currencies, prompting a transition where over 80% of its trade with China is now settled in rubles and yuan. Additionally, Russia engages in transactions with India using rupees. This move aims to mitigate the economic repercussions of sanctions and bolster financial stability by increasing reliance on local currencies. The surge in yuan-ruble trade represents a significant escalation, rising from approximately 30% just 2 years ago, highlighting a broader strategy to diminish dependence on the US dollar in global trade. Brazil is actively pursuing measures to lessen its dependence on the US dollar and foster closer financial ties with China. Both nations have recently signed agreements to facilitate trade settlements in yuan, marking a significant step in diversifying currency usage. This shift is part of President Luiz Inácio Lula da Silva's broader strategy to achieve financial autonomy within BRICS and reduce reliance on the US dollar. In March 2023, Brazil and China agreed to trade directly in their respective currencies, bypassing the US dollar. This deal, which allows for the exchange of yuan for reais, aims to streamline trade processes, lower transaction costs, and promote increased bilateral investments. This move is expected to strengthen economic cooperation and trust between the two nations. In 2022, bilateral trade between China and Brazil reached $171.49 billion, a 4.9% year-on-year increase highlighting the growing economic ties. Additionally, the Industrial and Commercial Bank of China, ICBC, has been approved as Brazil's yuan clearing bank, further facilitating yuan-denominated transactions and investments. This development has made yuan the second-largest currency in Brazil's foreign reserves after the dollar, indicating a significant shift in the country's foreign currency holdings. President Lula has emerged as a strong advocate within BRICS for conducting trade in national currencies, emphasizing the importance of financial independence from the US dollar. This strategic pivot towards the use of local currencies is expected to optimize transaction costs and settlement times, benefiting both countries economically. These actions underscore Brazil's commitment to strengthening its economic sovereignty and fostering robust bilateral relations with China, marking a significant evolution in the global financial landscape. Let's take a quick pause. Could you do us a favor? If you enjoy our content, please hit the like button. To help even more, leave your thoughts and feedback in the comments. Your engagement helps us grow. Thank you. India has implemented significant measures to enhance the adoption of local currencies and reduce reliance on the US dollar. A major step in this direction has been the agreements with the UAE, which facilitate trade settlements in Indian rupees, INR, and UAE dirhams, AED. This local currency settlement system, LCSS, was established during Prime Minister Narendra Modi's visit to Abu Dhabi in July 2023. The system covers all current and permitted capital account transactions, enabling exporters and importers to invoice and pay in their respective domestic currencies. This initiative aims to reduce transaction costs and settlement time, promoting financial inclusivity and transparency. India has also opted to conduct trade transactions with Russia in rupees, emphasizing a strategic shift towards using domestic currencies in international trade. This move is part of India's broader strategy to diversify currency usage and strengthen economic autonomy on the global stage. The Reserve Bank of India, RBI, announced a framework for settling global trade in rupees, which is expected to streamline trade with Russia. The agreements with the UAE extend beyond currency settlements. They include the establishment of an Indian Institute of Technology, IIT, Delhi campus in Abu Dhabi, set to offer various academic programs and research centers from January 2024. This collaboration aims to enhance educational and technological cooperation between the two countries. Additionally, the integration of India's Unified Payments Interface, UPI, with the UAE's Instant Payment Platform, IPP, will enable fast, convenient, and cost-effective cross-border fund transfers. The linkage of payment and messaging systems, including the RuPay switch and UAS switch, will further facilitate mutual acceptance of domestic cards and processing of card transactions, boosting bilateral financial interactions. These actions mark significant steps in India's strategy to diversify currency usage and enhance its economic independence, fostering stronger economic cooperation and trust between India and its trading partners. South Africa hosts a yuan clearing bank, a crucial step in facilitating trade and financial transactions in Chinese yuan. The agreement to establish a yuan clearing business in South Africa was signed between the South African Reserve Bank, SARB, and the People's Bank of China. This arrangement enables the supervision, oversight, and clearing of yuan transactions within South Africa, thereby supporting bilateral trade and investment flows between the two countries. China is currently South Africa's largest trading partner, making this development significant for both nations' economic cooperation. Moreover, the usage of the yuan in transactions between South Africa and China has seen substantial growth. According to SWIFT data, over 30% of payments between South Africa and Greater China are now conducted in yuan, a sharp increase from previous years. This rise reflects the strengthening bilateral relations and trade cooperation agreements between the two countries. These actions align with the broader BRICS strategy of promoting financial autonomy by increasing the use of member countries' currencies in international trade, thereby reducing dependency on the US dollar and enhancing economic resilience. Egypt is taking significant steps to diversify its borrowing sources and reduce its reliance on the US dollar. A key part of this strategy has been the issuance of panda bonds, which are yuan-denominated bonds sold in the Chinese market. In October 2023, Egypt successfully issued panda bonds worth 3.5 billion yuan, approximately $479 million. These bonds were issued at a favorable interest rate of 3.5% annually over a 3-year period. The bonds have been well received, reflecting strong interest from Chinese investors, and have helped Egypt secure financing at a lower cost compared to dollar-denominated debt. In addition to issuing panda bonds, Egypt uses the yuan for some trade settlements. This aligns with its efforts to strengthen economic ties with China and diversify its currency usage in international transactions. The United Arab Emirates has significantly strengthened its financial and trade ties with China by signing agreements to settle trade payments in yuan, including crucial energy transactions. This strategic move aligns with the UAE's broader goal of diversifying its currency use and reducing reliance on the US dollar. In a historic transaction, China conducted its first yuan-settled energy deal involving 65,000 tons of Emirati liquefied natural gas. This deal was executed through the Shanghai Petroleum and Natural Gas Exchange and marks a critical step in using the yuan for major trade deals, thus challenging the dominance of the dollar in energy transactions. The UAE and China have also signed several other agreements to enhance bilateral trade and investment. In recent years, bilateral trade between the two countries has grown significantly, with the UAE becoming China's largest trading partner in the Arab world. In 2022, the bilateral trade volume reached $69.2 billion, and both nations are working towards a target of $200 billion by 2030. Saudi Arabia is actively exploring alternatives to the US dollar for its oil sales and other trade transactions. This strategic shift is aimed at diversifying currency usage in international trade and enhancing economic ties with China. Saudi Arabia, the world's largest oil exporter, has been in discussions with Chinese officials to conduct some of its oil trade in yuan instead of dollars. This potential move is part of a broader effort to reduce the kingdom's reliance on the dollar and to strengthen its trading relationship with China, the largest importer of Saudi oil. Despite extensive U.S. sanctions aimed at curbing its oil exports, Iran continues to sell significant amounts of oil to China. In fact, China is the primary buyer of Iranian oil, accounting for around 90% of Iran's oil exports. This trade is frequently settled in yuan, bypassing the US dollar and mitigating the impact of sanctions. Iran has developed sophisticated methods to maintain and even increase its oil exports to China. These methods include using a fleet of tankers that operate outside of standard maritime regulations to avoid detection and sanctions. Payments for this oil are often made in yuan through smaller Chinese banks, further avoiding the US financial system. In 2023, a significant portion of global oil trade was conducted in currencies other than the US dollar, with Iran playing a notable role in this trend. By accepting yuan for its oil, Iran not only secures a stable revenue stream but also strengthens its financial ties with China, helping to sustain its economy amidst international sanctions. Trade between Ethiopia and China has been substantial, with the total trade volume reaching approximately $4.3 billion in 2019. Ethiopia primarily exports commodities such as coffee, oilseeds, and textiles to China. The demand for Ethiopian coffee and oilseeds has been steadily increasing in China, contributing significantly to Ethiopia's export revenue. China has been actively promoting the use of the yuan in its trade dealings with African countries, including Ethiopia. This promotion is part of China's broader strategy to internationalize its currency and challenge the dominance of the US dollar in global trade. Initiatives such as the Belt and Road Initiative have facilitated greater financial cooperation, with Ethiopia benefiting from Chinese investments in infrastructure and industrial sectors. Qatar has been strengthening its financial ties with China, evidenced by agreements to use the yuan for trade. In 2023, trade between Qatar and China reached $80 billion, approximately $21.98 billion, making China Qatar's largest trading partner. A significant part of this relationship includes the long-term LNG supply agreements where China National Petroleum Corporation, CNPC, and Sinopec have signed deals with Qatar Energy to purchase millions of tons of LNG annually. These deals are part of Qatar's strategy to enhance economic cooperation with China and reduce reliance on the dollar. Oman has engaged in UN trade agreements as part of its strategy to diversify currency use in trade. This move aligns with broader regional efforts to enhance financial stability and reduce dependency on the dollar. Oman is part of the Gulf Cooperation Council (GCC) countries that have been increasingly using the yuan for cross-border trade settlements. Bahrain is participating in yuan-based trade agreements to diversify its financial practices and reduce exposure to dollar volatility. This move supports Bahrain's strategy to enhance financial cooperation with China, aligning with regional trends towards financial diversification. Kuwait has also adopted the yuan for some trade settlements as part of its efforts to diversify currency use and reduce dependency on the dollar. This strategic shift is aimed at enhancing financial stability and strengthening economic ties with China, reflecting a broader regional trend towards de-dollarization. Malaysia is increasing yuan-denominated transactions to strengthen its economic ties with China and diversify its currency use. This strategy aims to reduce reliance on the dollar and enhance financial cooperation with China, reflecting Malaysia's proactive approach to managing currency risks and fostering economic growth. Thailand has relaxed rules on yuan use for trade, promoting local currency use and financial stability. This move is part of a broader strategy to enhance economic cooperation with China and reduce reliance on the dollar, thereby supporting Thailand's economic diversification efforts. Kenya is considering issuing panda bonds and increasing yuan use to diversify its financial transactions and reduce dollar dependency. This strategic shift aims to enhance financial stability and strengthen economic ties with China, following the trend of increasing yuan use in Africa. Zambia has established a yuan clearing bank and promotes the yuan's use in trade to support local and regional trade in yuan. This move is part of a broader strategy to enhance financial stability and reduce reliance on the dollar, supporting Zambia's economic objectives. Bangladesh uses the yuan for trade settlements as part of its strategy to strengthen economic cooperation with China. This move aims to diversify currency use and reduce dependency on the dollar, aligning with Bangladesh's broader economic goals. Indonesia is increasing yuan use for trade to enhance its trade relations with China. This strategic shift supports the country's efforts to diversify currency use and reduce reliance on the dollar, reflecting Indonesia's approach to financial risk management and economic stability. Singapore is active in yuan-denominated transactions to facilitate financial transactions in the region. This move is part of a broader strategy to enhance economic cooperation with China and diversify currency use, supporting Singapore's role as a global financial hub. Britain has significant yuan transactions as part of its strategy to promote financial services and trade. This move supports efforts to diversify currency use and strengthen economic ties with China, reflecting the UK's financial sector's adaptability and global orientation. Germany has seen a substantial increase in yuan use to diversify financial transactions and strengthen economic ties with China. This strategic shift aims to reduce reliance on the dollar and enhance financial cooperation, supporting Germany's robust trade and economic framework. Canada has increased yuan payments as part of its efforts to enhance financial and trade relations with China. This move supports the country's strategy to diversify currency use and reduce dependency on the dollar, reflecting Canada's proactive financial management. Sweden has experienced a major rise in yuan-denominated payments to diversify currency use in financial transactions. This strategic shift aims to enhance financial stability and strengthen economic ties with China, supporting Sweden's economic resilience and adaptability. Argentina uses the yuan for trade settlements as part of its strategy to strengthen financial cooperation with China and reduce dollar dependency. This move supports efforts to diversify currency use and enhance economic stability, reflecting Argentina's approach to managing economic risks and fostering growth. Venezuela is engaged in trade agreements involving the yuan to reduce dependency on the US dollar. This strategic shift aims to enhance financial stability and strengthen economic ties with China, supporting Venezuela's efforts to navigate economic challenges and sanctions. These countries' efforts to use the yuan in trade settlements or investments reflect a significant shift towards de-dollarization, driven by geopolitical and economic considerations, and supported by strategic agreements and infrastructure developments. That's all for this video. Thank you for watching this video. We sincerely appreciate you joining us today. If our content resonated with you or sparked inspiration, please consider expressing your support by liking it and subscribing to stay connected with our community. Your support holds immense value for us. You can watch another video of our channel which is now on the screen.